Hi everyone, Alex here. Stop me if you've heard this before. Oh no, I'm not going to invest in the stock market. It's so dangerous. You're going to lose all of your money. I'm just going to keep my money, buy real estate, put it in cash or do whatever. Anything rather than put it in the stock market. Today we're going to discuss and dispel these myths. Today I'm going to share with you the 5 habits with stock market investing that are going to enable you to build safely wealth over long term. And actually, I'm going to demonstrate to you how investing in the stock market is actually not only one of the most profitable, but one of the safest, if not the safest investment. Before we get to it, I'd really appreciate if you can hit the like and subscribe button. Also maybe hit me up with a comment. Let me know what you liked about this video and any future topics you'd like to see. And I'm really excited. Let's get straight into it. Right, the first thing that you need to do with regards to stock market investing is start now. No, I mean it right now. Put down this video, actually hit the like button first, then put down this video, go to your investment account, open it and start investing. Why? It's very simple. The concept is that of compound interest. What it means, and let's take a hypothetical example. If you have £1,000 and you make 10% each year, it means that the first year your £1,000 is going to become £1,100. You're going to make £100. But if you reinvest that entire sum the next year and you make again 10%, you're not just going to make £100, you're going to make 110. Now this means that over time you make more and more and more based on the investments that you have. Now, I know what you're going to say, Alex, interest rates, percentages, too complicated. Okay, but let's make it simple. If you invest between 25 and 40 every year, and just for 15 years you invest, if you compare that to investing for 30 years between 35 and 65, when you retire, you're going to end up with quite a bit more money in the first scenario. So by investing in half the amount of time, just because you invested earlier, you're going to end up with more money, and that's because of compound interest. So therefore, as we said, put this video down, open your account and start investing right now. Right, the second tip is around know what you're doing, and that means research the market. On a daily basis, it's really important to understand what's happening around the world. In the description, I'm going to give you 5 websites that you can go to on a daily basis and read. And my suggestion is, when you wake up and you're having your morning coffee, read these websites. And over time, you'll see that you're going to build a stronger understanding of what's happening and how it can impact your stocks and shares. And this brings us to the third tip, which is know yourself. The reality is you will never be able to, at every single point in time, know everything that's happening around the world with regards to every single market and every single stock. Actually, research proves that. Over a 15-year period, 90% of professional investors who try to pick stocks underperform the broader market. When you buy stocks and shares, you have 2 options. You either try to pick stocks, we call that active management, or you just buy the index, so all of the stocks in one bundle and do nothing. Over a 15-year period, 90% of the time, by just buying the index fund, you would be better off. Now, the index fund I would suggest that you look at is the Vanguard US Equity Index. I'm going to put the description in the link, and I would suggest that you put the majority of your money into that index fund and passively let that accumulate wealth over time. Now, I do realize that it might not sound as sexy and you might want to buy various shares. I, a couple of years ago, for example, bought Nvidia shares and I'm around about 300% up at the moment, and that's a great feeling. But that's quite rare. I'm not going to get that game with every single stock. Right, and this brings us to the 4th point, which is stay cool, calm and collected. Now, stock markets go up and down, prices go up and down. Just the last year alone, you've probably seen on the news or heard of the news of stock markets plummeting with the pandemic and then bouncing back up. The reality is, on a long-term basis, you cannot time the market, and if you try to do that, it could be potentially dangerous. If you invested between 1999 and 2018 and you stayed invested the entire time, so you didn't buy or sell, you just stayed invested, you'd have made around about 6% each year. But if you missed the top 10 trading days of the year, your annual returns will go down to 2%. So trying to time the market can have potentially devastating effects on your return. Now, the way to avoid that is the well-known principle of dollar cost averaging. It means that whatever happens each month, you keep investing. Let's say you invest £500 a month and you invest that every month. No matter if markets go up or down, you just keep investing. Now, the other thing I would suggest that you do is what we call buy the dip. So if one month you see that the market has dropped considerably, let's say more than 10%, I would then try and invest more than your average amount. That will enable you to benefit from those times where the market drops and then bounces back in the long term, therefore giving you better returns. So this brings us to the 5th and final good habit, which is Stay in it in the long term. Be consistent. Now let's dispel the myth that the stock market returns are risky. Let's look at the facts. Yes, in any 1 year period, the stock market can fluctuate and go up and down. But research shows consistently that over a 10-year period, it is virtually impossible for you to lose money. I'm actually going to take that a step further. If you bought right at the peak before the 5 previous market crashes, so $50,000, you would have nearly tripled your money today. I really hope that you've enjoyed this video. I personally have absolutely loved making it. I'm so passionate about stock market investing, and I hope that I've transferred a little bit of that to you in a way that you can see that investing is not only safe, but the best way for you to build wealth in the long term. Please like and subscribe to this video, and if you want, please leave a comment as well. I look forward to speaking with you next time.